FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And in this video guys, we're going to take a look at setups that were available during London that were really good setups. I want to make sure that we review these setups, take a look at what the entry points were, what the exit points were, so you can have a better understanding at what taking really good setups during London session really means. All right guys, so without further ado, let's get this started. All right guys, so let's go ahead and first start off with Euro Pound. All right, so here we have Euro Pound. This was obviously today during the London session, and you can see we ended up getting a nice type 3 setup. So if we go back into replay mode here and we let the boxes generate and stuff, you could essentially see that we have the Asian session here, the middle of the range here. You can see basically price comes down, goes back up to the middle of the range. It pins both the 50 and the 200 EMA, gives you a railroad track. That is a beautiful entry right there, right after the railroad track. This is right at 6:15 in the morning, and you can see you're only risking about 4 to 9 pips or so, because your stop loss is right above that railroad track. Okay, and of course you can see, I mean, you could easily get 5-to-1 risk reward ratio on this trade. Honestly, you're looking for 30 pips, you would have gotten that easily, even including the spread. Okay, so what are the contributing factors that made this trade a really good trade, right? So let's take a look. And so what we need to do is we need to better understand what's going on in the bigger picture. So if we go up to, let's say, an hour time frame, you can see that we're basically coming off a peak formation high here and into consolidation. And you can see all the EMAs, the bigger EMAs, the 200, the 50 right there going straight through price. That's an indication of consolidation. If you go down to the 15-minute chart, you can see essentially the same thing, but now you're including the 800 EMA. Now, very important how you can see that the entire week we've basically been in an accumulation cycle this week, meaning from Monday through today so far. So you can see price moving sideways and the 800 EMA keeping basically prices, you know, kind of stuck. And every time that they go up to the 800 EMA, they hit a brick wall, reject, reject, reject. So what made this particular trade setup really good was the fact that you knew you're coming off of, if you look at the 1 hour, you're coming off of peak formation high, you're in level 1 consolidation. Your bias should be a sell. Okay, so you have that. So you have the bias. You have the EMAs confirming your bias as well, because price is below, is trading below the EMAs, all of them, right? Now you have, of course, as we always say, the pattern. You know the pattern, which is this one is a type 3. You have the timing, it's in the box, so the timing is correct. The cycle, the weekly cycle, you know where you are in the weekly cycle because it's an accumulation cycle this week, so you know you're basically moving between support and resistance, support and resistance, support and resistance. At some point this has to break. We know that. Okay, now another thing as well, if you look at the TDI is basically bouncing off the 50 as well, and you have a second leg, a first and a second leg, basically an M on the TDI. You can see that right here. And the most important thing is that you can see an M even though you don't see it here on the chart itself. However, if you go over to the line chart, you can see clearly the M is there. Okay, so you have multiple forms of confirmation on this trade. The most important being that you have directional bias, you have an actual pattern, you have the right timing, you have TDI confirming, you also have the railroad track happening, pinning to the 200, pinning to the 50. I mean, there's literally like 7 to 10 different confirmations here for this trade. So this trade was an absolute beast trade to take, and these are the trade setups that you want to take Okay, you're not here to trade every single trade setup every single day, because they don't happen every single day, right? But when they do happen, this all comes together like this, with so many different confirmations coming in at once that lets you know this is the right trade. All right. Now imagine, instead of trying to trade every single day, 5 or 6 trades a day, imagine if you only take the very best trades that may only happen 3 to 4 times a week. So you get rid of all the fat, essentially, when you're trading this way, and you only take the very best setups, which give you a higher percentage in the win column when you're taking these kind of trades, when you're waiting for the right trade setups. Okay? Just understand that every day you're not going to have the perfect trade. Every day you're not going to have a trade at all sometimes. The problem is that a lot of retail traders have the mindset of a working a 9 to 5 type of mentality, meaning that if they're not doing anything or if they're not in the market, they feel like they're losing out on an opportunity. The problem is that when you do that and you go into the market, you end up just losing money at the long run. At the end of the day, that's what you end up doing, is losing money. So if you can grow your patience, do some back testing on the actual setups that matter, get you a list of 5 to 10 things that setups have to have in place for you to take the trade, and I guarantee you your success rate, your hit rate for wins is going to be a lot higher than what it is now. All right. So that was Euro Pound. The next one is Euro JPY. Same thing, a type 3 setup. So let's go into this replay here and let's bring up the boxes so we can see exactly where they are. So you can see here essentially a very similar setup to Euro Pound, which is, it's a type 3 setup. Okay. And so the first thing that some of you might ask or think is this, a lot of you may have taken this as like a type 1 or type 2, right? As a trade like this going down. Right, so if we play this out like this, you might have thought this right here was an M, right? You might have thought that this right here was an M. You saw this right here on the TDI as well as an M. So a lot of you may have taken that as a type 1 or type 2 M instead of waiting. Okay, so what can we do to avoid essentially that kind of a mistake, right? I think the first thing that you have to have is you got to have some kind of directional bias, because the directional bias essentially is going to tell you whether you're looking for a setup to buy or to sell. If you don't have a directional bias to begin with, then you're probably going to run into this where you get into the wrong side of the trade. Now, granted, there's going to be times when you have a directional bias and everything looks perfect. You take the trade and you end up losing it. That's perfectly fine. It's still going to happen at some point. Most of the time, we find that whenever you have multiple confirmations, everything looks perfect and you lose the trade, most of the time you're losing it because of a reset that's happening. So if you don't know what a reset is, I made a couple videos on it. Just check out our Trading with Market Makers playlist, and you'll get all the info in that playlist. Let's take a look at the directional bias. So what's the directional bias here? If we look at just the weekly cycle, okay, which is starting obviously from Monday, if we take a look and see what's happened so far, we had a full day of movement on Tuesday. Okay, and we broke Sunday, Monday's high. We're trading above Sunday, Monday's high. So that can only mean one of two things. Okay, either we're going into a trending cycle for the week, where this is going to keep going up, or we're going to have a market maker cycle, which will have basically like a reversal that ends up happening. So it's going to be one of those two things. Either a market maker cycle, basically you'll have a mid-week reversal that happens here and you'll end up going back down again, or obviously a trending cycle, and a trending cycle would pretty much have you do this instead. You'll just keep creating, a higher high and then drop and then keep going up, right? So I think in order to find out, okay, is this really going to be a market maker cycle or is it going to be a trending cycle? I think you need to look at the higher time frame. And so if you go up to, let's say, a 4-hour time frame, an 8-hour time frame, just take a look and see what's happening here, right? A major point, if we go all the way up to a 12-hour time frame, is you can see this right here, this 129 area, 129,500 area is a huge reversal point here most recently, right, from the 24th of February. Now if we go back, you can see previous structure right here at the same area. Hits, hits, hits. You could see the previous structure there. Okay. So if it's going to go higher, it's essentially going to go to that area first. And then you're going to see, okay, is it going to react? Meaning, is it going to reverse, or is it just going to keep going up, right? So the way that I look at this is, what's the most likely scenario essentially to happen? All right. If I look at just the TDI itself, I look at the yellow line here. The yellow line is basically the overall sentiment of the market. Okay. Anytime that the yellow line is above the 50, that means that the sentiment, meaning that there should be buying sentiment in the market and it should go up, right? Another thing that you look at is, where are the bigger EMAs? So if you go down to a 15-minute time frame, where are your bigger EMAs? You have the 50, which is right here, the 200 and the 800. They're all below price. That's a good thing, right? That kind of gives you a scenario of essentially of directional bias, right? So you have the TDI that's above the 50, okay, even on a 15-minute chart. If you go up to, let's say, a 1-hour chart, still above, 4-hour chart, way above, you can see my point, right? So essentially my bias of this would be to look for buys and not look for sells. Also, another thing that you could look at as well is you can look at how many pips has it moved since the most recent high, right? So if you're counting, let's say, levels, right? So like how I was doing here, I just came off of a reset from this bottom to this high, which is about 3 times ADR, right? So you essentially got one move down that basically cleared another reset to happen. So from here to here is another 260 some odd pips, right? So you had a whole nother cycle here, and now you're coming off of this high. Now the question you got to ask yourself is, it's moved 174 pips in one direction, which is down, and it hit the 800 and reverse. Why would it hit the 800 and reverse? If you look back at price action, hits 800, reverse, hits 800, reverse, hits 800, reverse. Do you see the pattern here? It keeps resetting the price action so it can go higher. Okay, so far, again, my bias is, because of I see all the evidence here, my bias is to look for buys. So I'm not going to get into this sell setup, even though it has the pattern and the right timing. My directional bias is telling me to look for buys. Okay. And so even if you get into this trade, as soon as you see this right here, as soon as you see this railroad track pinning to the 50, okay, that should be an alarm ringing in the back of your brain to get out of the trade at a small loss or a break-even trade. So even if you take this as an M coming down, as soon as you see this big one bullish candle that's pinning to the 50, and that basically just took out the last 30 minutes or so of trading, that right there should be a sign for you to get out of the trade and just break even on it and tell you that this is actually a type 3 going up. So the entry was on the slight little pullback there on that candle. The stop loss is going to be about 13 pips or so, and obviously you can see that you ended up getting way more than that even into the US session. So this ended up producing about 45 pips really, just to go to where previous structure was on the higher time frame, which is up here. Gave you 40 pips easy. So that is Euro JPY. Another one, this one actually happened in the US session. We actually talked about this in our trade room today. Euro Swiss. Euro Swiss had basically a continuation trade, which is something that we talked about during our trade room sessions today. So you can see here, continuation trades basically is a continuation move from what happened during the London session, right? So you had a straight move here from London, and then you had a pullback. The pullback just happened to be that it pulled all the way back to where the beginning of the US session is, basically the beginning of the box, right? So essentially you pulled back about 20-25 pips from the high. You're not looking for a reversal, right? You're too far off the high of the day, what you think is the high of the day, to try to do a sell. Besides, if you look at the cycle for this week, it's a trending cycle, right? It's been trending the whole week. Why would you look for sells? You'd be looking for buys. So you had the directional bias in your favor. You had literally the behavior that we look for continuation trades to happen. And so that was a trade on Euro Swiss. You didn't have the TDI as confirmation on this one. You literally had the pattern that you look for continuation trades specifically. You had the directional bias, you had the timing in the right place, everything like that. You just didn't have the actual TDI as an extra source of confirmation. And so the final one here is AUD CAD. And AUD CAD, you can see we had a very nice type 3 continuation trade in the New York session. So again, I think one that we talked about it during our trade room as well. Same behavior as you can see from the other one. It's a continuation move from what happened during London. So during London, you had a one-way move that happened. You had a pullback right at the beginning that ended you right in the middle, right? So when you count this, you're 20 pips away from what you perceive as the low of the day. So you're not looking for a real reversal. You're looking for a continuation trade, a continued move down. Not to mention, you end up getting price pinning to the 50. You have the 200 literally right above it. So you can see on the TDI, you had also the bounce off the 50 straight down. You can see the bounce off the 50 here as well on the middle of the range. So multiple forms of confirmation, pins to the EMAs, to the 50, to the 200, right at the beginning of the US session. These are all great confirmations, right? If you look at the weekly cycle so far, you had a full day of rise Tuesday, and then midweek reversal happened on Wednesday, and then Thursday just basically continued that move down. This is the market maker cycle. You knew what cycle you're in. You have the pattern. You have it in the right timing. beginning of the US session, pinning to the 50, pinning to the 200. You're 20 pips off the bottom of what you perceive as the low of the day. TDI helps you confirm that. So you have all the confirmations. So the trades that you want to take are the ones that you have the most confirmations for. So remember, you're like basically a detective trying to solve a case. The pairs are the cases. The ones that give you the most evidence, the most confirmations, are the ones that you take. But you have to realize that sometimes you're not going to get any good trades on certain days, and that's okay. You don't have to worry about Fred or John or Joe or whoever that takes 50 trades a day. Worry about yourself. That following somebody that does 20 trades a day is not going to get you anywhere. Take the time, take the best possible trades. Be a detective, find out what trades have the best possible evidence for you to take a trade. And be smart enough to realize that if there's no good cases, then just don't take a trade. Take the day off. It's not like trading is going to go away tomorrow or something like that. It's always going to be here. It's not going away. Even if you have digital currencies, it's still going to be here. All right? So guys, if you need any more help, we have a new mentoring class starting on the 14th. It's in 10 days. So if you need help and you want to join that class, links are in the description. Thank you so much. Enjoy the rest of your trading week.